Today we had exciting news around China giving US full access to the audits of most firms. So more than 200 firms that are listed in New York are actually affected by that, and so this could be a rare concession by Beijing, and the news today was leaked by Bloomberg. And so in the following conversation I'm joined again by Brendan Ahern, who is CIO of CraneShares and responsible for more than $6 billion in client assets for Chinese and emerging market stocks, and with a focus on growth stocks in particular. And before I jump into the recorded call again, let me just say that this is not investment advice, and again, just for entertainment purposes. As always, do your own due diligence and make your own investment decisions. So hello everybody, and thanks for joining us again. I'm here with Brandon, and well, yesterday we've talked about it, and good call, Brandon. It seems like this move today is really about this news possibly around Bloomberg leaking today about how this delisting issue could possibly be solved. And yesterday we talked about it, making a differentiation between private-owned companies and state-owned companies. So first of all, Brandon, is this just an April Fool's Day move here, or is this legit about what we've been hearing in the news today?
Yeah, I mean, Bloomberg's news out of their Hong Kong office, reported that, according to sources, people familiar with the matter, that the Chinese regulator is moving to differentiate between the private companies who, as we spoke about yesterday, have nothing to hide, and contrast that with state-owned enterprises who, within their audits, there might be sensitive information. And I think it also provides a little bit of an insight that the reason that the Chinese companies and their auditors haven't been able to adhere to this rule is due to Chinese law. And the article insinuated or spoke to how different regulatory bodies in China were going to have to amend some of the rules in order to allow this, and therefore that could take several months, that we might not get something official until midsummer. But it does show that on the China side, there is a little bit of a level of complexity for the US side potentially to understand that needs to be some tweaks, some changes to some of the local rules to allow this.
Maybe for the viewers to understand, like you mentioned, like security issues, information issues, like what is usually in such kind of an audit information, and what information would the PCAOB would kind of have an oversight, and why is this critical to from a Chinese perspective?
Well, I think you have many of these companies as tech companies. They have user data on their user base. In people in China, where are they driving? What are they buying? What are they? And that material I just don't see how it could end up in an audit review. But there might be, the China side might want to have some clarity from the US that type of information is not going to end up in an audit review, which again, I just don't see how that's feasible. At the same time, there are a very small number of state-owned enterprises listed as US ADRs, and those companies might actually have information about what their level of subsidies are, where they're doing business, how they're going about business, that there's the potential that would be in an audit review. And that's where we've long advocated that there's a differentiation should take place. That Alibaba's CFO or their outgoing CFO, she's moving on, staying with the company but relinquishing that role. She said for many times, Maggie, their CFO, has said, we have nothing to hide. There's nothing in our audit review anybody should be worried about, and we want to adhere to this global standard. And I do think that there's a strong willingness to show that that these audits are done in a very professional a global standard, is feasible. That might be a little bit harder for a much smaller numerical number of securities, a small number of state enterprises. But why not allow the private companies to proceed with adhering, and working on this SOEs might take a little bit longer, and ultimately if they go away, I don't think it's a significant issue for either side.
Yeah, I fully agree there. And so, well, is this the news that we have been waiting for the entire time? I mean, like looking at the markets, yeah, China tech is nicely up, but we've also been fading a little bit after some good pre-market action. So, yeah, what's the view from the institutional investors side here?
Well, I think you have to put yourself in the shoes of a professional investor, and for a professional investor, buying these names or having exposure to these names could be some element of career risk, that someone could say, how could you own these names? Because, this delisting risk is still out there. Yes, a very positive step today, but to really allocate in a significant fashion, a lot of large mutual fund families, they're going to want to see something very concrete. So they'll be a little bit more conservative. Now they can be a little bit more aggressive because they don't have to show their holdings. As of yesterday, the end of Q1, they have to show their top 10 holdings. Mm-hmm. So now you have up until the end of June that you could own these names and no one would know. So there's a small impetus for the lack of transparency on actively managed mutual funds to get involved in these names. Now that hesitation of wanting to see a concrete resolution, there are investors that are less affected by that, and that would be hedge funds. Mm-hmm. And that's because of the hedge in their name, that they're more likely to be going long the names they really like and maybe short the names they don't like, or they could use other ways to hedge themselves. They could hedge market risk through ETFs or futures. And so that way they have some downside protection if some bad news were to arise. And so I think you're going to see more aggressive investors getting involved faster. But again, remember, these big fund families, no one wants to lose your job. No one wants to look bad. And that's going to explain some element of their conservatism. And they're not going to be willing to take extreme capital allocation until we get that concrete resolution taking place.
Right. So kind of a first step and a little bit of a de-risking here, although not the final words yet. And maybe for someone who's more risk-taking can kind of dip the toes into the water right now and maybe front run some of these institutions if possible. However, like once again, maybe one final question between, you mentioned like the separation between state-owned enterprises and private companies seems to be kind of on the table now, which might be a very feasible way going forward. But within the private company space, I mean, we still have companies like Didi and maybe even other companies who are maybe more exposed to, let's say, some information that shouldn't get out there. Do you see like any differentiation in terms of industry-wise or small caps, large caps, anything which we could think around which is more at risk and less so?
Well, I think you have companies that have relisted in Hong Kong. They provide that proverbial escape hatch in order to avoid a delisting, that you could convert your shares from the dual listed names. Not all of the names have relisted yet. We do anticipate them to continue with this progress, but there's a number of names that haven't relisted, and I would strongly say to those companies that they should relist in Hong Kong. That I think, and I think that will be an outcome, is you'll have companies want to relist, even with a resolution that, Bilibili announced recently that it would move its Hong Kong listing as its primary listing in Hong Kong. And that allows it to be added to Southbound Stock Connect, which again opens up mainland investors from China to buy those shares, something we've seen from Li Auto and Xpeng. At the same time, you're also going to want to always have a US ADR, just because the US capital markets are so global in nature, and that capital market is so much larger than being in Connect, that, you know, even for Tencent, it's about 7% of their shares are held from investors in China, which again, that's big, but you know, you certainly look at the allocations from, you know, US, European asset managers, that's relatively small in comparison. So I think, you know, the way, you know, you could do this is, you know, you could buy the basket through an ETF. Obviously that's highly biased and self-serving on my part, but on the individual names, you know, I think you want to stick to names that have a dual listing, just in case something occurs where the two sides can't nail down that final agreement.
Right. Yeah, definitely interesting dynamics here right now. Also considering Chinese companies have started buying back their shares, so it's kind of now first come, first serve for the cheap valuations, and then.
I agree. I think the company buybacks, you know, we spoke about yesterday, how they're telling us that they think the companies are cheap, and the regulatory, and if you think about, you know, the March 16th speech by Vice Premier Liu He, you know, this we're talking about a 180, a total pivot from the previous policies. And this article today does show that there is a level of complexity that for these regulators in China to change, it does take a little time. And if anything, it shows that internal mechanism, those internal gears are turning, and that's a positive sign. That's a little bit of a deeper read into this article, but I think that article did show that this policy from the top down, from Liu He, very important person in China's government, you know, these regulators are changing. You know, the pendulum is swinging back, and
yeah,
and
I mean,
a
like,
strong sign.
Now he's got to bring back the price back home, right? After like going out like this, cannot lose face anymore. At least that's my interpretation. And yeah, let's see. Like the CSRC has outlined before that this would be like the June, July deadline for some positive news, possibly. Yeah, might be confirmation today with that news.
Yeah, that's a great point, Marcel. Yeah, man, you're 100% right. You know, that's a great pickup in that. You know, in the past releases from the CSRC, they've mentioned a, you know, midsummer solution, and this again reaffirms that timeline. In the interim, you know, we'll still have the SEC adding more Chinese companies to the uncompliant list. I think we should be aware of that over the next several weeks and months, you know, we'll have all 273 names on that list, and those headlines will be bad, but I think if we know that there's a finish line, hopefully we can weather that volatility, and we do continue to monitor situations about. There's been talk about U.S. politicians wanting to shorten the window from 3 years to 2 years. And we continue to really monitor that situation in a very significant fashion, because we think that would be an error, particularly in light of the very clear negotiations taking place.
On that note, that didn't happen so far, right? I think that was in your other China Last Night post. It wasn't in the Senate, in the bill. What? Yeah.
So it's interesting that this America Competes, the House passed a version that included shortening the window, but the Senate version that just passed did not. And so we took that as, you know, potentially trying to read the tea leaves, that you know, maybe the Senate, you know, felt like shortening the window during negotiations was not a good thing to do, which I would agree with if that was their, you know, their why it didn't show up. But the process of reconciling the two laws will take place. where staff members from the House meet their equivalents in the Senate to try to make the two bills equal. Mm-hmm. And it's feasible that you could have the House side say, we want this shortened window. And, we'll see if there's a willingness from the Senate to try to negate that effort. Again, I think it would be, almost obtuse. It would be, knowing that these high-level talks are taking place, it would be a shame to see that window be shortened, because it puts a lot of undue pressure on those negotiators. So hopefully during the reconciliation process, we don't see this window shortened, that the two sides are allowed to solve this. But we'll obviously keep monitoring that situation. It's a top priority.
Yeah, ideally we'll have more than words by summer, also from the Chinese side. I think that's kind of where the ball is currently at. Previously, SEC obviously mentioned full access to the books, and now it's for the Chinese side to react. Today they came back in that fashion. So I'd say, positive development so far. We cannot call this the end of the negotiations, but let's see. Hopefully a strong follow through and also a positive reaction in the markets. Thanks again for coming on the channel today after this big news, and let's connect soon again, Brandon.
Yeah, most definitely. Thank you, Marcel, and certainly enjoy your weekend, and keep up the great work.
Cool. Yeah, you too. All right, see you next time.